Oracle had given a revenue guide for the next 4 years. So what they said was, we have an $18 billion cloud business that's going to go to $150 billion plus over the next 4 years. Wow. The problem that the street had was there wasn't really explanation of how they would, raise the funding, build the infrastructure, and how that revenue would come about, because it was all attached to OpenAI, the $300 billion backlog, which is essentially $60 billion per year just from one company.
Yeah.
So now what they're saying is, okay, we have visibility to how we are going to build the initial tranche of that AI infrastructure and data centers we need for the 2027 target, which is essentially $44 billion in revenue that they want to have by 2027. So for that to happen, they need to invest, up to $50 billion plus. So I compare them to the CapEx that Meta and Google and Amazon will be making this year, which is all in excess of $100 billion.
Yep.
Where does Oracle stack up? So far, the consensus was they would be below $50 billion in CapEx. Then how do you add $44 billion in revenue when Microsoft is not adding $44 billion in cloud revenue in 2027? And that's where I think they are making that upfront investments you need, which all these companies are making.
Yep.
Yes, you have to do it through debt, and you're already over-levered, to your point that their CDS spreads had widened. And that's where, they're using a combination of equity issuance and debt to raise that money, set up the AI data centers, which in turn will translate into $44 billion in cloud revenue by 2027. So that's where, if you believe their plan is going to be successful, which cloud demand is the one thing with AI, whether or not they are, big applications, nobody knows, but everyone will be consuming compute on the cloud. That's kind of the part of the business that's visible.
All right. Tech investors that you've been dealing with for years, they've been used to funding big CapEx, big R&D out of internal cash.
Yeah.
Now, that's changed. They need to go to the capital markets, whether it's the debt capital markets, equity capital markets. This is something new for your investors. How are they digesting it?
They are. That's why, there was a panic around Oracle, and you saw that 40% drawdown, because you're right, in the case of Microsoft, Meta, Google, they generate up to $100 billion in free cash flow in a year. So with an Oracle, which generates about $20 billion in free cash flow, how do you make a $50 billion plus CapEx investment? And that's where, the gap needs to be bridged. And I think they're just maybe thinking too big in terms of how they want to ramp up that cloud business. And, right now they are 4% of the overall cloud market share pie. Based on the numbers that they have given in terms of the guidance, they would be 15-20% of overall cloud market, which is growing, by the way, 30-40% plus and expanding at that growth rate. So that's where I think there was some skepticism around what is it that Oracle can accomplish, given they don't have the free cash flow to fund this build out. And it'll be interesting to see how the bond trades when they, issue this. And there are a lot of unknowns still when it comes to the Oracle story.
Like I said, tremendous numbers here for Oracle. Another story we're following, Mandep, is Elon Musk, said to be in advanced talks to combine SpaceX with xAI, his startup AI company. What does this mean for SpaceX's planned IPO later on this year?
Well, so I tie it to, the funding needs for building your AI, large language model infrastructure, and then rolling it out to millions of users. Same thing with xAI. When you compare xAI Grok to, let's say, Gemini or, OpenAI ChatGPT, xAI, even though they are a frontier model, their user base is like 20, 30 million compared to OpenAI, which is 900 million. So one, they have a much smaller customer base when it comes to the traffic that they're serving. And these companies have to constantly invest in training their large language model because, the three frontier models, OpenAI, Anthropic, Gemini, are going forward in terms of, the capabilities that they're adding. So xAI doesn't have a choice but to keep investing. Problem is, because of their smaller user base, no one wants to keep, funding xAI with another 10 billion round or 20 billion when they don't have free cash flow either. So it's the same problem that Oracle has. and they don't even have, that user base. So that's where combining xAI with SpaceX does make sense, because SpaceX is a much bigger entity. At least they have EBITDA margins of around 50%, even though it's a very high fixed cost business. So the ROIC is much lower for, some like an entity like SpaceX. But combining it makes it more palatable for anybody who is putting money in that combined entity and saying, okay, at least you've got two entities where I'm ready to put some money, as opposed to just xAI.
And SpaceX also has visibility. I mean, it's got these projects with the government, so it can project out what it sees.
Do we have any
years.
sense when that IPO might happen? Because they're suggesting this year.
They are suggesting, even OpenAI and Anthropic want to go public this year. So this year could be huge in terms of, IPOs.
And by the way, the underwriters can't write research on these companies, but who can?
Yes.
Bloomberg Intelligence
will be ahead.
And so what happens is we write the definitive research report on these big IPO companies.